While everyone is chasing gold, silver is just as beautiful as gold, but with way less risk. See, in this video, I'm going to be breaking down how to trade silver like a pro. If you are a gold trader or you've been manipulated so many times in the gold markets, this video is going to be made just for you. I'm going to break down exactly how you should be trading this, what times you should be trading this, what strategy works best for this pair, and most importantly, how to stay consistent trading silver. So let's go ahead and get straight to the video. Notice silver here on a 15-minute to 1 hour chart. Yes, this is moving up, but the nice thing about silver, it is very structured. If you pay close attention to the market, you see that we don't have crazy manipulations, meaning these big rejection wicks either to the top or to the bottom. You're literally getting what you're supposed to get when it comes to a steady, consistent market. If you look here, what we have is a zigzag pattern where market goes up, creates the pullback, and then continues to go up. Well, if you look closely, this is exactly what it does consistently. So let me show you how we will trade this step by step. So the very first step is going to be mark the London or New York range. After that step, second step would be wait for a liquidity sweep of prior highs and prior lows. When you are in TradingView, you want to go up top where you see indicators. And when you see indicators, you want to type in something called trading sessions, and you want to get the very first one you see, which is this one here. Once you get that, it will look just like this, showing all of the sessions that you want, which is Tokyo, London, and New York. So as you see here, London session and New York session were basically ranging, but what we needed to do was mark the highs and mark the lows. We wanted to see where the market was actually going to go after it took out either the lows or the high. So notice here during Tokyo session going into London session the following day, the market decided to sweep out the lows instead of the highs, and the moment it did that, it instantly pulled back. This is going to be the next steps of what you want to pay attention to and for when you're trying to look for the proper and correct entry, and that goes right to step 3. Pull your fibs. And when you pull out your fibs, you want to draw it from the 0 to 100%, meaning you want to draw it from the beginning of the range to the end of the range, meaning you want to draw it from the beginning of the trend, rather if it's going up or rather if it's going down. And that is what's going to be the most important thing that you need to follow when dealing with this strategy. And then with step 4, you want to confirm with the 9 EMA power candle close. Let's talk about what this looks like in the charts. Going back to the charts, you see right here, we instantly took out this low from this London and New York session. We instantly pulled back. So now we need to look prior to this pullback to identify the most recent range. If we go back, we will have to look for the most recent range starting from this top swing high to this top swing low. What we're then going to do is draw out our fibs from the top all the way to the bottom, and we're going to wait on the market to pass our 44% Fibonacci level. Now after it does that, we then want to look for any valid POI zone levels inside the 44%. This is going to help you guys mitigate all of the BS noise so you don't get trapped. Meaning, if you were the trader to have multiple support levels, resistance levels, key levels, you can mitigate all of that by just following this simple play. Anything above the 44% is going to be a valid POI level for us. So seeing that we had a lot of supply and demand here, following up with a fair value gap, this is a chance for us to say this level is valid. Once it taps in here, we can enter. But for safety, we're going to wait for the proper entry, and we're going to be using a 5-minute time frame to enter in the market. So once we hit the 5-minute time frame, we're just going to simply use the 9 EMA moving average, which is the exponential moving average. From there, we're going to go ahead and wait for a closure candle crossing past the 9 EMA. That is what we call a power close candle, which is this one here and this one here. And then we're going to take our entry based off of risk to reward ratio following with our fibs. And that is going to be a simple 15 to 25 pips, or we're going to follow our fib extension, which is the 0.27 to the 0.618. And if we go back, you see that regardless, wherever we entered, this would have been a proper trade for us. And all you need to do is put your stop loss just 5 to 10 pips from the entry candle. Now let's talk about session timing. So London, 3 to 6 a.m. Eastern time is going to be a good window for you to trade. Reason is because Euro and GBP is where we get the liquidity spikes. And then you also have your New York opening hours, which is going to be the 8:30 to 10 a.m. Eastern time. This is where metal volatility surge. And then you also got post news from 10 usually to 11 a.m. Eastern time. This is where the trend continuation window happens. Meaning, like I said earlier, where market will come up, come down, does its corrective wave, and then the continuation. And this is usually happening around this time at 10 to 11. So you guys can catch a lot of opportunity if you know how to really trade this with proper timing. So when it comes to risk and scaling, this is the most important part to really grow your account and actually get withdrawals from $100 to $10,000 or even a $10,000 to $100,000 account. You want to always risk anywhere from 3 to 5% per setup. Remember, silver isn't gold, but it's still volatile. And then you want to scale every plus 25% growth on your overall account. So here is the real reality of silver versus gold and why I'm telling you guys, if you lock in with silver, you can be just as profitable as some of the gold traders you're seeing as of today. With gold, yes, 150 to 250 pips is possible, but with silver, you're getting anywhere from 80 to 150 pips. Volatility with gold is very extreme, but moderate when it comes to silver. And that's what we want. Fakeouts is big when it comes to gold. It happens very often, but with silver, you get less of that. And then idea sessions for gold is anytime, and that is correct. And then it is occasionally the exact same for silver, but I realized London and New York, you can eat very well with consistency. And if you are an aggressive trader, then gold may be the option for you. But if you want something precise and consistent and actually making money, go with silver. This is going to be the breadwinner, especially for a scalper, because gold can really play with your emotions if not done right. And that leads me to the last part. Gold feeds you adrenaline, silver feeds you balance. So if you guys ever need help of trading gold, trading silver, or really locking in details, you can tap into our community at tradewithsolo.com and we'll get you in our community for free with either option A or option B, whether if you want to join with our brokerage firm that we use to trade live, or if you want to join with the prop firm that we also use as well. Other than that, make sure you comment, like, and subscribe. Your boy Solo tapping out. Peace.